The next thing can drastically affect your credit is borrowing. This is a cute little cartoon. I'll give you a chance to read it. I won't read it to you. But borrowing basics, have a budget. It's real good to have a budget. Sometimes when you borrow money from someone in your family or a loved one or a friend, it can ruin a friendship. It can ruin a relationship. If you're borrowing money from a financial institution, make sure you're on you're signed up to pay that back, and you have a schedule and you understand when the payments are due. If you're late with the payments, that will be reported and negatively impact your credit score, which reduces your options in life, really. So you got to be responsible about that stuff. So I hope you had a chance to read the cartoon, but it's really it's a lot comes down to logic and making good choices and thinking things through. Another term, I guess I like to say it. It's not about tonight; it's about tomorrow. So just kind of always trying to think ahead. How will this impact me? How will this choice make my financial life a little bit better tomorrow or the next day? So credit for I think everyone here we understand what the credit is: the ability to spend money you don't have. Credit cards, credit scores. You're buying a house, getting a mortgage. The better your credit is, not only the more options you have, but the lower the cost will be. So let's say your credit score is 685 versus someone who has a 750 credit score. Well, they're both these people are going to be able to attain loans. But the person with the higher credit score is going to have to pay significantly less over the life of repaying that loan. So having good credit really impacts how much money you can borrow and how much money you keep in your own pocket. You don't have to pay back. There's some interesting auto dealerships up in Lake City Way in Seattle. If anybody's up in King County on our virtual meeting here, Lake City Way has some very, very interesting auto dealerships, and they get very creative with how to put money in your pocket, or how to empower you to use money that you don't have, and it's oftentimes not in your best interest. So careful on Lake City Way. Why is it important? I think we've gone over this, but it can be incredibly useful in times of emergencies. It's more convenient than carrying cash. A lot of places during the pandemic have gone cashless, and these companies are sharp. I don't know if any of you have gone to a point of purchase, excuse me, and you don't even have to insert your card into the reader anymore. You can, depending on the card and the point of purchase device, you can just hover your card over the payment machine. So that's pretty cool. You can make large purchases with credit: house, cars, vacations, lifestyle loans, and it can impact lots of areas of your life. Employment being a major one. They do pull your credit when you apply for auto insurance, and that credit score is often, they're tied together. There's lots of data and lots of research that shows, all right, well, if you're making these types of decisions in this area in your life, you might be making the same type of decisions in other areas in your life. And if they're negative ones, then they carry over. So you can see kind of how an insurance company might want to charge more premiums for someone with a lower credit score. I don't necessarily agree with that approach, but it's just how it works. So it's better to know than not to know. But for example, if you move and the bill gets sent to the wrong address and you don't pay it, and now it's reported to the credit agency. That happened to me when my friend sent the bill. It was like, hey, Garrett, what's going on? That can have a negative impact on your credit score. So be aware of this stuff, and it is very important. Types of loans with credit. Credit cards give you the ongoing ability to borrow money. So every month, right, you can use your credit card. Let's say you have a $5,000 limit. Oftentimes when we go over credit reporting, we say try not to don't go over 50% of your limit. But if you have to, it's useful in case of emergency. Consumer installment loans, these are a little bit different. These allow you to pay the same amount each month into a predetermined amount that you've borrowed. So unlike a credit card where you can just spend, whatever it is under that limit, an installment loan is you've gone to the financial institution and say, hey, I need $1,500. And they say, okay, well, we'll give you the $1,500, but we're going to charge you a $75 or $100 fee and 18% interest, or 36 or 70%. They might not tell you what the interest is, but they might say you have 6 weeks to pay this back, and we need to have proof of your payment stub or direct deposit. In often cases, in those circumstances, the interest rate is much higher than they'll ever advertise, and that's why they use the term fees. So make sure you pay attention to that. Again, I know I've said this, but the devil's in the details in all types of loans. So very important. The fees, we went over this. The fees and interest they're different for every financial institution, credit union. There's a credit union, Kitsap Credit Union does a phenomenal job with auto loans. It's really hard to compete with them. That's what they've decided to do. That's their strategy. It's part of their business model, and they do a great job. So they have what I think a great job, low fees, low interest payments, easy process. There's a credit union up in the Bellingham area that has basically told all the other credit unions, don't bother setting up shop around here, because we'll make sure that basically we'll make sure that we're the best option. So they'll eliminate fees and have the lowest interest rates out of any FI if a financial institution tries to go into their market, is how they call it. And that's up in Bellingham. And that financial institution does a phenomenal job for their members. So I tip my hat to that sort of that sort of approach. So at any cost, they want to take care of their members. I think that benefits the consumer. So,
Brian, you're speaking of WSECU, right? There's a question in the chat.
Yeah, I was. Can you repeat that first part?
That you are in with that slide. You're talking about WSECU specifically.
Oh no! So the two examples I use are two different credit unions. So. Yeah, I want to make sure I understand that. I'll go back. And so different credit unions, different banks, different financial institutions will have different fees and different interest rates on different products. So I was using the auto loan example on the peninsula of a credit union that they've just chosen we want to be the go-to financial institution for auto loans on the peninsula. So they've done that by way of having very low fees or no fees and the lowest interest rates. So they keep an eye on their competition. And the other example, it's a different credit union that I don't want to name, is they've taken a sort of an approach to all the other credit unions in the state saying, hey, don't come to our area. If you do, we're going to make sure that nobody goes to you, just by way of, we'll lower everything. We'll eliminate all fees for 18 months if we have to. So that's a phenomenal credit union up there. Again, I don't want to name their names because I think that benefits the consumer, so it doesn't bother them. I don't have a problem with that. But did I address? I'm not sure if I addressed.
Yeah, I think so. I'm just looking in the chat.
Yeah. So that brings up thank you for whoever put that in. So not to go down a rabbit hole, a side note, but yeah, WSECU. We have some phenomenal programs. One of them is FEPPP. We just call it FEPPP. So if you're going through something in life, and life throws you something unexpected, you're dealing with something you didn't plan, you didn't budget for, maybe you don't have the means to address properly, you can call us up and tell us what's going on. they'll say, okay, if you have a loan with us and you owe us money that month with WSCC, if you have a loan with WSCC and you owe money, we'll say, hey, don't worry about that. Get your life handled. Make sure you're okay, you're healthy, and pay us next month. And we're not going to report that to the credit bureaus. So that's a really, I had never heard of that program before I started working at the credit union. And I think I've shared this with this group before, but I for like the first 3 months of the credit union, I was calling all my family members and relatives and friends saying, "Did you know about credit unions? You got to join a credit union. They're so much cooler than banks. They're so much nicer than banks." But I didn't know. I wasn't aware. It just kind of shows my lack of knowledge, and I thought I was pretty financially savvy, up until 6 years ago. So